The following is a presentation of TFNN. Now, from TFNN, the author of Mastering Probability, Steve Rhodes, The Trader's Edge. You can call with your questions live and toll-free at 1-877-927-6648 or internationally at 727-445-1044. Now, Steve Rhodes.
Futures, they're up 3 points. They're trading out at 2021. NASDAQ futures up 10 points, trading out at 41.52. King dollar on the move this morning, courtesy of Super Mario Draghi out there. You got the U.S. dollar index up about 400 ticks, trading out about 87.98. We'll take a look at that euro currency pair because she's trying to bust out some support out there. What is that setting up? Well, that's setting up a little bit of pressure inside the commodity space. Light sweet crude back a buck now, trading out at 77.65. Goldilocks down $2, trading at 11.43. Really not too bad considering the move inside the U.S. dollar index. Silver, she's down 12 pennies, trading out at 15.31. They're having a party over in Europe. I believe they're having a party over in Europe. Let's go take a look at it. The DAX, that's up a little over 1%, up 106 points. The FTSE over in the UK, that's up about 0.3%, up 23 points. In Asia last night, the story goes like this. The Nikkei down 144 points, about 1%, 0.9%. The Hang Seng off 0.2%, off 46, and the Shanghai up 7. Hey, you know what? Our call-in number, it's 877-927-6648. I'd love to hear from you, and I'd love to hear your story. So give me a call. Hey, this is Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. I almost forgot my favorite thing to say out there, but no, I did not. So let's go take a look at these markets and go see where they're headed to, because that's a great question. Now, you know that what Stevie has been expecting as part of the story, and it's really the story of the markets. It's not really my expectations. It's the story of the markets and what the story they have told us over the course of the last 44 years. And what they have told us over the last 44 years is simply this. It's further back than that, but geez, 44 years worth of data. How much data do you want me to crunch, for goodness sakes, out there? Have you crunched 44 years worth of data? I have, and I can tell you that 44 years of data says the market's going to make a major bottom, a significant bottom, in October. And that's what we did. Of course, we got that bottom courtesy of none other than H.M. Gertley when it formed that Gertley buy pattern. You know, H.M. Gertley on his page 222 out there, he says, hey, if you've ever missed a move and you want to get in, his best technique was to wait for an A to B equals CD to the downside, and that's what we got on October 15th, and we got the hammer candle, so we got all kinds of signals. The market was giving us all kinds of story out there. Now the markets want to move higher through the end of the year. Will it be a straight line move? No. The mere fact that we've had so many up days in a row, is that a problem? I don't know. I actually did I was doing some data mining before I came on the air, so we'll go actually take a look at some of that and see what it means out here at some point in time during the next couple hours. But if we do take a look at what's going on specifically inside the market, I want to start off with the NASDAQ. And so if we take a look at the NQ, and the reason I want to do that is because really, in essence, that's the strong dog out here. That's the lead dog. My question that I would pose to you is, can the market move higher in a sustained way without the NASDAQ following along? Without the NASDAQ pulling things along. You know, I have said that the NASDAQ and the Russell 2000 are the two indices that you want to be long on the next move down or sideways, because that's really what I believe that we're in. And even actually to prove the point here, we saw markets actually move to the upside here. The NQ, though, was struggling. It was not able to take out its high from yesterday at 9:30. Remember, when we were taking a look at the 30-minute charts here inside of the NQ yesterday, we noticed one of Stevie's favorite market stories, which is when the market makes a higher high, does it with less strength out there. That's telling us a story as soon as the bears actually show up and they give you a reversal signal. Well, we were on the air, and we said, look at that bearish engulfing candle. That was a doozy out here, very much like the candle that we're seeing, although it's not really a bearish engulfing if we take a look at the euro out here, and we will do that. But and so the highs were in. Those highs have not been taken out, and so we'll also take a look at a chart correlating the Dow, which has moved to higher ground, but the NASDAQ hasn't. And my question that I pose to you is, can the Dow continue to move to higher ground without the NASDAQ? And I think the answer we're going to find out is no. But we'll go let the markets tell us the story, because the markets are always telling us the story. I'm just really a storyteller and telling you what it is that I see out there, so then you can use that for your trading and investing decisions out here. So what do we know about the NASDAQ at this stage? Looks like it's just simply been a retracement from the high to the low. Let's go check out. Let's go measure that retracement. Now, this is not going to be exact because it doesn't necessarily have a magnet on here, but it's close enough. And the retracement that we saw, I don't know how's this happened, 0.618. So on this little bounce that we've seen here so far, 0.618. We're still in the seasonal cycle over the last 44 years where the market, in essence, should move sideways, maybe lower for the next week and a half or so. How about like 2 weeks? How about through not next Friday, but the Friday after that? Yeah, if I were going to go ahead and give you a date. And what's so interesting about the story that this individual that I was speaking with this morning, as he was telling me his story about the market and all the research that he's done and what his conclusion came up with, I said, well, that just really matches the story, which is a different story. I was reading a different book, different information. It came up with the same conclusion out there. So it's a pretty good conclusion. So I'm just sharing with you a couple of different stories out there that say the next viable bottom, it's probably not for another 2 weeks out here. And that means we're going to see, for many, a very frustrating market out here, because this could be a market that just simply chops around and moves side to side out here. In any event, inside of the NASDAQ, nothing more than just a 0.618 pop into Mario Draghi's news out here. That's what the 30-minute chart. Now, that's not what the Dow chart shows. If we go take a look at the Dow chart out here, let's go see what it shows on its 30-minute basis, and voila, could actually be, I got the 3 different wave counts out here, because that's, in essence, what you've got to do as we take a look at it. But could it be the 7th wave on the way up here this morning? And the Dow actually, it was not moving sideways yesterday, no question about that. So far, not moving sideways here this morning. Did move to higher ground out here. No price relative strength divergent pattern out here, but the potential for a 7th wave to the upside out there. We'll see if the Dow is able to hold on to these gains. I suggest that it is not going to be able to do that without the NASDAQ coming along. And the other thing that's got to go along with the marketplace out there, you know the answer to this. It's going to be your friend and mine. That's the Euro-Japanese yen. So if we go take a look at the Euro-Japanese yen, the ultimate in liquidity gauges inside of the market out here, if we take a look at it, it is sold off from its session highs out here. So if this continues, and we know that this also has made a beautiful 1.272 butterfly sell pattern. Now, in today's action, and there is a lot of time left in today's trading session, but at the close of the currency market out here, if we see a close inside this currency pair below 142.48, and you're 142.58 right now, yeah, 142.48. Okay, yeah, 142.48. Visually, I have something screwed up there. I got to put my glasses on, don't I? So if you see a close below 142.48 out there, then this currency pair is suggesting that it's going to pull back. And so that really gives us the message, a correlating message that says, yeah, the outcome of a market moving sideways to lower over the course of the next couple of weeks is really what's in store for us. So, and unfortunately, you're probably going to get sick of my story, but it's really not my story. It's the story of the markets out here. I'm just connecting the dots for you. And so with the markets moving higher, this currency pair moving lower, that too is one of those really, I don't think so kind of moments out there. Now, so let's go, well, we can't do this. When we come back from the breakout here, let's do this. Let's go I was just beginning to put together a chart, the top of which I believe is the NASDAQ composite, the bottom of which is the Dow. And we're going to go check to see, can the Dow sustain a move higher without the NASDAQ? 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, one of the great storytellers of the markets out here is Mario Draghi. I'm not really sure I didn't get a chance to hear what he had to say, but I always smile because he tells a story. He tells a lot of fiction, does he not? I mean, you talk about a guy that pushes stuff out there that is really not real out here. I suspect that maybe that's even a part of the story that was out there. The market had its response. The market will go ahead and assess his story and say, the guy's really kind of more of a fibber out here. And in any event, he does what he does. We'll know whether he's fibbing or not. We'll see we really don't care. It's really what is the market doing here. And as we take a look at the euro, if we take a look at the euro, right now what it's doing is trading out at about 1.242, and it's trading down below a couple of bullish signals. You've got a 1 to 1.272A to B equals CD to the downside. That's really where it's trading at right now. You have a hammer candle from November the 3rd. That low, that specific low is 1.2442. You've got a bullish engulfing candle that occurred the very next day. Price has been pushing lower with less relative weakness out here. So that's always a good sign for a reversal. And really, we got two reversal candles. That hammer is under attack as we speak this morning. You get a close below that, 1.2442. Look, if you were long, you're wrong. That is for sure. And where would prices then go to? You'd have to say the next move would be down to about the 1.233-ish range. If we take a look at just expansions of swing points as well, let's see what do we have that line up here. Yeah, 1.2267. So that would be the range of where price would go. But price really stopped right at the 1.272 expansion. That set of swing points that we just looked at out here. Let me go ahead and let me see if I can. There we go. I can spread offense out here. We take a look at it. So the exact number, the 1.272 expansion of swing points, that's the swing point here from the low on October 3rd to the high on October 15th. And that number, 1.2401, we actually saw the euro get down to 1.2398. You got to like that. So the question becomes, here's the deal. You get to close back above 1.2442, and Mario Draghi was nothing but a fibber. Fibonacci is really what I was saying. A Fibonacci expansion. You thought it was the other kind of fibber, did you not? I think you did. In any event, let's go take a look at that correlation chart that I had mentioned here, the Nasdaq and the Dow. And what I wanted to take a look at yesterday, because the Nasdaq certainly didn't move to higher ground, and we're just seeing the beginning of a potential divergent pattern out here. Now, one day only makes a short story. It's those longer stories that you want to really be paying attention to. So we can see the Dow here, which is the bottom of my chart. That's the blue lines. That's the blue line. The red line out here is the Nasdaq composite out here. And what is interesting is I'm just really looking for patterns where the Dow has moved higher and the Nasdaq has not confirmed that move out here. So as I come back along the chart looking for that, one of the first patterns that sticks out is right here. Let me go get my line tool so I can draw that on the screen. And as we draw that line tool, I'll make it with the arrow, the white arrow. That way it sticks out the most. So back here, it looks like we had the Dow between March of 2014 and about April of 2014. It was making higher highs, and the Nasdaq composite was making lower highs out there. And eventually the Dow caught up to it. And so the answer there in that question would be what? No, okay, it's only one example, right? But you can see what I'm looking for here. I'm looking for where the Nasdaq is making lower highs, the Dow is making higher highs out here. I know that there's a few of them around for us to pay attention to. We just have to really search, kind of closely. I'd have to say we're pretty close right in here. It looks like this is back in May of 2013. Now, look, what I'm doing here, I'm not forecasting the market's made this ultimate high and it's going to come crashing down or anything along those lines. That is absolutely not what I am saying or suggesting. What I'm helping us do is really just kind of read some of the divergences that are out here. And that way, what it does is it really sets up that move into not this coming Friday, not next Friday, but the Friday after, where we likely see the market give us that next viable bottom. Now, let's not get so caught up into it actually to the day. Just let's know what it is that we're looking for in our excursion out here. And as I say, before I was coming on the air, was really saying, hey, what is it that we can look at? What can I show each of you out here? Here's a period of time here where the Dow was basically making not higher highs, but it was traveling in a parallel zone. This is back in 2012. That is a loud entry versus back down here where it was making lower highs into October of 2012. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 35 points, trading up 17,519. S&P up 2 at 2,025. Composite up 2 points as well. She's trading on at 4622. Russell 2,000, slightly green out here. They're partying over in Germany. The DAX up 102. FTSE up 26. Goldilocks back $2. Silver down 14 pennies. Light sweet crude off $1. Leading the charge to the upside. Ticker symbol DATA. Tableau Software up 11. 11% this morning, up $8 in change. Polypore International, PPO, up 15%, up $6.57. LinkedIn up $7, trading up 3% out here. Sierra Wireless up $5, up 18%. Tesla up about $4. Whole Foods Markets, we got to take a look at that. That's up $4. That's up 10% this morning. Rand Gold Resources. Now, this is interesting. This is very interesting. GOLD is a ticker symbol. That's up 7% here this morning. Something is brewing. Something is brewing over at Rand Gold Resources out here. Let's take a look at this. If we take a look, what is brewing over at Rand Gold? Is currency thing out here? Yesterday was moving down actually with volume out here, but today didn't create an island. Thought maybe it might have created this little island reversal bottom out here, but no, looks like it just missed it. What I was looking at here, that's why I immediately moved over to this. Well, let's check it out. My eyes could be wrong. My eyes could be off. I'm looking at the trading session from October 30th out here, and the high is 62.03. What's the low this morning? 61.98. So it missed it. Gosh darn. Missed it by a total of 6 pennies. Needed 6 pennies, the low intercession. Then you would have formed a little island bottom reversal. And inside an equity, that would have a ton of meaning out there. Not that that doesn't have meaning right now, but it wasn't the type of meaning that I was after out there. But got Rand Gold moving higher. Gold's off about a couple of bucks. We'll take a look at and right now the screen that I've got, it's got about 40 different mining equities. They're all green, with the exception of really two. Taseko Mines, TGB, Vista Gold is flat. Now that's down a penny, so not a big deal. Vista Gold is actually totally flat, so it's unchanged for the day. And then you've got the Direction Daily Gold ETF bar. So, of course, that should be down as well. But otherwise, we've got all of these mining stocks here have taken off to the upside. Yesterday with a big flush down the toilet to the downside with volume for the most part. So let's go take a look at this now. Let's take a look at this from a percentage standpoint. Let's percentage moves out here. See if this works here. So percentage moves to the upside. So you got Kinross Gold this morning. KGC is the ticker symbol. Let's go get a feel for what's going on here. So KGC, what we know about this is that at this stage here, down with some pretty big volume on October 31st out there, 38 million shares. Today so far, in about 12 minutes of trading, up with about 2 million shares. So its level of resistance out here is at a price point of 236. You're at 223. Getting above 236 would go ahead and close that window, and that would be pretty impressive. Otherwise, that's going to be a level of resistance. I am gold. IAG is a ticker symbol, up about 8% here this morning. Now, down yesterday pretty hard. No real signs of strength or anything inside this equity. It's just got an inside day. Inside days, if that's all that it does, means that the continued trend, the trend should continue. The prior trend where it came from. Rand Gold, we mentioned that earlier. That's what I had noticed first with regard to the move, and thought maybe there was an island bottom, but not to be. Now, if in fact Rand Gold, GOLD is a ticker symbol, can close above 63.17, it'll have taken out an area of resistance. That was the gap down. That's where gaps can actually prove to be provide you with more reliable information, better. You knew I was trying to say more better, but you can't say more better. It doesn't even exist out there. But it does provide you with better information because than a wide-ranging bar, because when you can take out an area of resistance, then old resistance should become new support out there. That's what's going on with that. Allied Nevada, that's up 5% this morning. Of course, being up 5% means you're being up a nickel. Of all the three that we just took a look at, this looks like doesn't look very good to me out there. Sandstorm, S-A-N-D is the ticker symbol. That's up 13 pennies this morning. I'm not sure why the stock chart. There we go. Stock chart here. What does this show? This doesn't show a whole lot out here, so I'm not that impressed with Sandstorm. Goldfields, GFI, let's take a look at it. It did gap up a bit this morning. Now Goldfields, it's got a way to go. It's got to get above, close above, I should say, the 343 level. You're at 329 right now. AUQ, Orico Gold, that's up 4%, up 12 cents out here. Nothing impressive as we take a look at that. El Dorado Gold, let's go take a look at that. EGO, nothing really impressive here just yet in the morning. So it'll be interesting to continue to watch this. Let's go take a look at two of the real strong ones out here. The two strong ones. Let me do this. It'll be easier if I go back and put it in symbol order out here. Anglo Ashanti. Let's go see what that is. Up a quarter as we speak right now. This is, if we take a look at this equity, what this has done is this took off with a nice little sign of strength here off of the bottom. That was on November the 3rd. Volume behind that move was 8.8 million shares. The day next, 5 million shares on a retracement. Yesterday, 3.9 million shares on a retracement. And this equity here, sign of strength, and it pulled off of the bottom, and it pulled back with light volume out here. So this is one to be paying attention to, in my opinion. The other one that is strong out here, that there's only two that really are really strong. Strong from a stock pattern standpoint, meaning when you come off of a bottom, you want to see something come off of a bottom with volume, right? Well, if you take a look at Royal Gold, RGLD out here, that formed a bottom, or formed a low, I should say, right on October 31st, gets down to a price level of 55. You got to love it. Nickels all the way. And then what's it do the very next day? And that was with 1.7 million shares when it was down. 1.6 million shares, actually, when it was down there. 1.7 million shares to the upside the very next day. So a slight rise in volume. But nonetheless, there were no other stocks that were moving higher with an increased volume level, and Royal Gold was one of those. And then what did it do over the course of the next couple of days? Pulled back with 1 million, pulled back with 1 million shares. Today, so far, it's done volume of 67,000. So worth keeping an eye on. Let's go back to the general markets out here. Before the bears were knocking at my door and totally interrupted me. They were actually, they didn't like the bullish message, so they went ahead and actually cut the cable line out there. So that was a problem. Of course, they were just trying to say, hey, try to be a storyteller of the markets now without an internet connection, Steve-O. And, of course, not really good at doing that. So you got silver. Silver's down 11 cents right now, and gold down about $1.80. U.S. dollar index giving back some of its gains, of course. It's all going to be about really the currency markets. Right now, our markets are relatively flat. The Dow is up like about 20 points out here. The S&P is flat. The NASDAQ is flat. The Russell is flat. The NDX 100 is back a couple of points. New York Stock Exchange is up $1 out here. So, this is the this is weird. This is the market out here that is going to probably, the general market is what I'm referring to, is probably going to frustrate a lot of people over the course of the next couple of weeks out here. But again, I'm just trying to set the proper expectation, and that way you won't be so upset. Now, and I apologize, I think it's Robert in Chicago who had called yesterday, and he was calling about Whole Foods Market. And let me see if I can find Whole Foods out here. And he's looking to get long Whole Food Marketplace out here. And we took a look at it on a monthly, on a weekly, on a daily time frame out here. Come on, work for me. We'll see if that pops up on the screen. Maybe it was on the different view. I might have looked at it. I want to just, since I already have some work that was already done. There we go. So if we take a look at Whole Food Marketplace out here, this thing really did gap up. So this thing is trading out at 44.31. So yeah, he was right on this call. He was right, and I was wrong on this. Now, when I say he is right, because he was looking for a bottom out here. Now we both identified the bottom and the better buy on this being in the $36 range out there. So that piece of it proved to be right. What we also did identify was this little rising price channel that it had been in, and so just as we went into that second one of the breaks out there, I said, hey, if you can close above this rising price channel, then clearly we've seen a change in trend. Now, here's the danger inside Whole Foods Marketplace. This is what's going to be interesting. 49 million shares to the downside on May the 6th out here. May 7th, I should say. 49 million shares. But today you've done 6 million shares already in only 19 minutes of trading. My daughter, who's a math teacher, she would tell me I could get this one pretty quick. You got more volume moving to the upside. Now, this could really just simply be setting up a consolidation out here. And the bottom of the consolidation, or the top of the consolidation, could in fact be the bottom of that gap from May 6th. out there, which would be 47.87. But at this stage of the game, Whole Foods Market, it's in the extreme overbought condition. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Right now, the S&P pretty much unchanged, down about $1 out here. I'm flying blind, basically. The Bears went ahead and cut off my internet connection again. But we're going to go out to Robert
who was good enough to call back, Robert in Chicago. Robert, thanks for calling. How you doing this morning?
Oh, I'm very good, Steve.
Are you kicking me in the head?
No, not at all. No, not at all. I just, what are you going to do? You know, you got to do your best and.
No.
I have no problem. There's no way you're flying blind here, so you don't really. Where do you think can go? Whole Foods Market.
Well, in the case of Whole Foods, you know, at least what I still have on my screen when the system froze, so it gives us at least some pretty decent information out here. You know, one of the things, I don't know if you caught after you had hung up, we went into a break, and I came back, and I had, identified this little rising price channel that had been traveling in.
Yep.
So I don't know if you caught that piece of it.
I did.
Okay, so clearly it's broken through that, and it's traded above the June 13th swing point that had 5.9 million shares. And in just the first 15 or 20 minutes of trading, it had already done 6.5 million shares. So that alone is pretty, positive out here. Here's the thing. As far as where can it go, it's in this zone here where we don't know. You've got this, in essence, this little supply line where people were trapped from May the 6th out there. And that was up at a price level of 49. It was up at a total of $48 out there. So many people rode it from 48 to 36 out there, which is a pretty decent hit, 25% hit. So but here's the deal with today's volume, that can actually overpower that supply line. So it's going to be important to watch today's volume, see where it really ends up. Ideally, the way to trade this, would be to buy the first pullback. Would be to buy the first retracement. And what you could do, so if the market is good enough and goes along to the script that I'm reading, and in essence goes sideways to pull back over the next 2 weeks out here, then maybe Whole Foods markets will also go along with it and pull back. Now, ideally, where would that take it to? The top of its rising price channel would be nice. That's around $41, 150, 42, somewhere right around there. I think we've got to just really watch this, we got to continue to watch this, see what information it provides to us out here. But so far, so good. It's just that supply line. It's just, and so it should find, in theory, it should find resistance at about 47.87.
Okay. Yeah. Right. Okay. That's wonderful. So, Steve, you don't see a high volume high, so you can't see this thing going up towards the highs again, 65-ish, into the 60s again.
Well, what it's done here is it's changed its trend. So then the issue is there a high volume high? The answer to that question is no. So I don't see a high volume high on a daily, on a weekly time frame out here. But nonetheless, you have new information that was revealed to us, and that is that it has certainly broken out. We know that it's got some overhead resistance, and we just need to watch to see how it handles that area. All righty?
So, if I get a shot at 42 or 41, I'll take that. And thanks very much, Steve. Appreciate it.
You bet. Thanks so much for calling.
All right. Bye now.
Folks, I'll do the best to get my system back up and running, so stay tuned for Hour 2 of the Trader's Edge. Have a great Thursday. Look forward to speaking to you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.